Bejel, it's great to have you on the show. So how did you do that, $7 billion in this kind of volatile environment?
Thanks, Sarah. Look, I think it's really a reflection of the firm's performance and track record over time. This wasn't something that happened overnight. I think we're fortunate to have the support of an incredible set of limited partners who've seen the firm over multiple fund cycles, and hopefully we'll reward that support with some good performance over the coming decade.
So clearly capital isn't a problem, but what about deals?
Well, I think in all of these areas, including in the venture landscape, the sense we have is that there'll be a flight to quality. And so I think we'll see the very best companies, for example, as the very best funds, perhaps benefit from an environment like this. But marginal companies struggle. In terms of the environment right now, I think it's a little bit of a mixed bag. Growth, obviously, the late stage privates market is in a very tough spot, not yet fully adjusted because a whole bunch of companies raised capital last year and don't need to come back to the markets. I think early stage continues to tick along. There's still a lot of strong founding teams out there building for the next 7 to 10 years. And so we're continuing to see some pretty compelling opportunities there.
What about, I wanted to ask about buy now, pay later specifically. You're in a firm. I don't know if you're in Klarna, Bejel, but that's been the story of the week. Raised new funding, $800 million. The valuation, $6.7 billion. This was a company valued at $45.6 billion a year ago, 85% cut. So these down rounds are happening. What does that say about the space?
Yeah, Sarah, I think this is, if there's a company that is out and has to raise capital right now, it's really ugly. And I think, that's a reflection. There's a lot of companies, as I mentioned, that don't have to right now. And that's what, in a sense, is going to cause the market to take some time to adjust. I think, look, we've been through downturns, severe downturns before, post the dot-com phase, not as severe and not as perhaps long-lasting in 2008. And those were really times when some very compelling companies were born, and those were good times to invest, but also times when firms had to really steward their existing portfolios carefully.
So one of the opportunities, I think, where you see value is crypto. That's one of the vehicles that part of the fundraising today. Where is the value in crypto right now? And do you think that we've seen the worst of the carnage in some of these prices, like a Bitcoin, or brokers that have gone bankrupt and not returned cash to shareholders?
Yeah, Sarah, I think, from our perspective, our effort around crypto is really focused more on the underlying technology, applications of that technology, underlying infrastructure. And, again, our view is very long-term on this. When the firm started investing internationally in the early 2000s, the question was, gosh, is there really venture capital outside the United States? And it wasn't entirely clear then. I think with respect to crypto, we continue to believe that there'll be very exciting, very compelling applications of the technology, and that actually over the next couple of years will be a good time to invest and build patiently, because a lot of the tourist capital and a lot of the FOMO-induced interest is out of the market, reflecting in the price corrections that we've seen. From a new investment perspective, if you have conviction around the underlying technology, we think it'll be a good time to be sensible and put some capital to work.